Hey guys, wanted to do a quick little video and show you how I actually go about analyzing a rental property. So I'm going to show you how to do it using the BiggerPockets Calculator. If you've been following me for a while, I'm sure you've heard of BiggerPockets. They're a great website resource. They also have podcasts, forums, all sorts of great information on their site, as well as some books that they've published. So I'm going to show you a property that we actually just closed on this Friday. The property is 5601 East 101st Terrace in Kansas City, Missouri. This is a 3-bed, 1-bath. It's just a little over 1,000 square feet, and this is pretty typical for most of our single-family rental houses. Okay, so once you're on the BiggerPockets site, you're going to go to Tools, Rental Property Calculator. So I already have it open here. So you've got some fields here where you can fill out a title, the property address, and then annual property taxes. So I'm going to actually show you where to get this information. So I have a lot of properties here and I have a pretty good idea of what the taxes are going to be, but you should always double check on the actual county website. So if you go here, this is Jackson County, Missouri. I'm on the website. I've already looked it up, but I can see here property taxes were $799.70. So that's how I rounded up to 800 here. There's a spot here where I can actually add a photo. So I uploaded a photo of the house. That'll show up on the report here later, and you can also put a little description in here. So good little tip, whenever you're going to get a bank loan, you can actually print out the report that this is going to generate and give it to them, and it'll show them basically your numbers on the property. So purchase price, this was actually a short sale. That means that we actually purchased this property for below the loan amount, and we got it for $43,000. The after repair value on this house is about $65,000, and I just know that because I have a lot of property in that area, and I've had a lot of appraisals, so I've got a pretty good idea of what that's worth. If you don't know, this is definitely where your realtor can come in handy. Get their opinion on what the actual value is. So like I always say, I will never pay full price for a property, so we're buying at a pretty good discount here, getting it for $43,000. Purchase closing cost. This is obviously going to depend a little bit on your lender, but I've got $2,500 in here. That's for a commercial loan, and I just I know from the last few closings that's going to be a pretty close number. You can also expand this column here, and you can kind of itemize it if you want to. So estimated repair cost. This property was pretty much ready to go. It actually had a tenant in place when we bought it, and it was rented for $800 a month. That's actually a little below what the market rent should be, but we're going to keep the tenant in because they seem to be a good tenant. So estimated repair cost, we had a little bit of some tile work to do in the kitchen and a couple small miscellaneous repairs, so I just plugged $2,000 in here. So this isn't a really big fixer-upper. You've got a place to put all your loan information in here. So down payment. So on an investment only property, you're just about always going to be 20%. So I've got 20% down here. Loan interest rate. We're with a commercial loan on this one, and our rate is 5.75, and then our lender charges 1 point. I also have $500 in here, other charges from lender, and that was to cover the appraisal. Loan fees and points. So pay loan fees out of pocket. That's pretty much the way things have been going with us. And then you have a checkbox for interest only, which this is not. This is an amortized loan over 20 years. and then there's a spot here where you can put typical cap rate for your area. I usually leave this blank. That's kind of an optional thing. So next step, so like I said, gross monthly rent is $800. I knew I could look at this two ways. I'm gonna put the actual rent in here for right now, but you know, this could be $850, $875 with a new tenant. So I could come back and change this and see what it would look like if it was at the correct market rent. So here's some fixed landlord paid expenses. So this is a single family house, and it's pretty typical on a single family that the tenant will pay all of the utilities, and they will also be responsible for taking care of the lawn and things like that. So really I don't have any expenses here. Now if this was a single or a multi-family property, then the chances are I would have some things here. It's pretty typical on multi-families for the landlord to cover, you know, garbage, sometimes water and sewer and things like that. So you definitely need to understand what the tenant is responsible for and what you're responsible for. A lot of times that can make or break a deal. And then there's the variable expenses. So vacancy. Vacancy is a little bit more subjective number. Obviously you can't know what the actual vacancy on that property is going to be, but you can make a pretty good prediction. And the way that I would get that number is by calling property managers who are working in that area and ask them what their typical vacancy rate is. So the PMs that I'm currently working with, I know their vacancy rate right now is about 5%. So we're very fortunate here in Kansas City, Missouri. You know, inventory is pretty low and there's pretty high demand, so vacancy rates are fairly low. And then you have repairs and maintenance and CapEx. So this particular property, the furnace, the water heater, and the roof, so most of the major mechanical items, they had already been replaced. So I don't think there's going to be a whole lot of capital expenditures in the near future on this property. If I knew there was a big expense coming up, I would probably increase the CapEx a little bit. So right now I'm at a 12% overall, and you know, that's just from talking with other investors as well. You know, how much are you guys spending on repairs and maintenance? So I would say typical range is anywhere from 10 to 20% total, and I'm here at 12%. Then we have property management. So my PM charges 8% of the gross rental income. I usually just put 10 in here because, you know, you usually get charged with some fees and things like that. So in reality it ends up being 10 anyway. And then we've got some future assumptions to make here. So annual income growth, we have the actual growth in the value of the home, growth in expenses. So I'm usually a little on the conservative side, so I just assume everything is going to keep up with inflation, which the government says is 3%. That's another story there. I think it's probably more, but I'm just going to plug 3% here to be conservative. And then sales expense. So if you were to sell with a realtor, you're going to pay 6%, plus you're also going to have your owner paid closing costs. So this is an investment property, and this area is mostly rentals. So the chances are I would be selling this off to another investor versus a retail buyer. So I'm just going to put 3% in here, and that would basically cover my seller paid closing costs. So then we're going to hit calculate, and it spits out this nice report. So we got a picture of the house and all the numbers here. So I really like the way that they present this report here, and you know, it's great, like I said, to show your banker so they can see that you understand what you're doing. So we can see here that total operating expenses, so that's basically everything minus your mortgage, is $282 per month. Your mortgage is $241. You can see our cap rate here, so we're right at a 10. Cash on cash return, we're about 23%, which is pretty good. And then I like to look, if you scroll down to the bottom here, this just kind of shows the performance over time of that property. So your cash on cash return is 23, and it's obviously going up over time there as your property value increases. And then we have annualized total return. So this is probably, there's a few different numbers that I look at and as far as criteria. So my criteria is I need to cash flow at least $100 per unit, and I want a cash on cash return of 12% or better. That's kind of what my criteria is. And I also like to look at the total return on a property. So as you can see, because we're buying, so in the beginning of when you buy a property, a lot of your gain is coming from buying that house at a discount. So if you buy a $50,000 house for $40,000, you're basically making $10,000 the day that you close that house. So that is the reason that this annualized total return is so high the first year. It's a combination of loan pay down, appreciation of the property, and cash flow. So that's where, and then buying at a discount as well. So that's basically where your return is coming from. So you can see here in year 4, property value has gone up by 3% each year. Now again, you can't bet on that, but it's very likely. So basically in 4 years that property is going to be worth 73. You've paid your loan down a little bit, so you were at 33 when you bought it, now you're down to 30. So in year 4 you have about $42,000 in equity in that property. And I tell everybody that if you buy properties properly and at a discount, you know, every 4 years you ought to be able to double your portfolio. So if I sold that house in year 4, I should be able to take my returns and have enough to buy 2 houses versus 1. So I can double my portfolio every 4 years. Honestly, with this one, we could probably sell it in year 3 and double our portfolio. So the more of a discount you buy, the faster that growth curve is. So that's basically how to analyze a property in a nutshell. If you have any questions, feel free to reach out. Also search the BP forums, they're awesome. Chances are you can find the answer to just about any question that you have. So thanks for watching.